You're listening to AI PRISM from Seoul Economic Daily.
Do Samsung's AI pivot, the U.S. AI access control regime, and Korea's incoming M&A governance reforms require an immediate board-level decision or strategy update for My Korea operations? It's Thursday, June 18. Let's look at a business story shaping corporate Korea. Today, we are diving into recent Seoul Economic Daily reports to decode the AI-driven restructuring, capital expenditures, and regulatory shifts that are, directly hitting the C-suite.
Right. Our mission is really to figure out the real-world strategy behind the numbers here.
Exactly. So just looking at these massive hardware investments, is physical infrastructure becoming like the new defensible moat for legacy hardware margins?
Oh, it absolutely is, yeah. I mean, especially when you follow the capital. As a prime example, LG Innotek committed 1.6 trillion won, which is approximately 1.1 billion US dollars, to FCBGA substrate capacity.
Okay, wait, let's unpack that jargon for a second because FCBGA substrate sounds incredibly dense.
Yeah, it really does.
We're essentially talking about the high-tech foundation layers that advanced AI chips sit on to, communicate with the rest of the server, right?
Right, exactly.
So they are basically building the physical bedrock for AI.
Yeah, they are laying down the physical roads for this technology, and the financial expectations are just immense.
Oh, I bet.
To highlight that scale, 1 trillion won, roughly 690 million US dollars in operating profit, is the 2031 target for LG Innotek's data center substrate division.
Wow. That is a staggering target for a single division.
It really is.
And it mirrors the broader facility scale-ups we're tracking, right?
Yeah.
Like when Hyosung Chairman Cho Hyun-joon opened a 30-megawatt capacity hyperscale data center.
Massive scale.
Right. So they are building the roads. But that brings us to the cars actually driving on those roads, the software.
Sure, yeah.
I mean, do the software deployments actually justify these massive #COSPI capital expenditures?
They do. Well, and the return on investment is showing up almost immediately in operational efficiency.
Oh, really? Like how so?
For instance, Meritz Fire and Marine Insurance reduced a multi-week analytics workflow to just 15 minutes.
Wait, going from weeks down to 15 minutes, that is a massive operational leap.
Huge.
But how does that translate into actual capital protection?
Well, 1.16 trillion won, roughly 830 million US dollars, represents Korea's annual detected insurance fraud last year.
Okay, wow. That's a lot of capital on the line.
Right. So by accelerating their analytics, Meritz isn't just saving administrative time, they're catching fraudsters at the speed of thought.
Preventing payouts before the money ever leaves the door.
Exactly.
Hold on, though. Shifting to AI and achieving those efficiencies sounds phenomenal on paper, sure, but pivoting an entire legacy business model requires massive corporate restructuring.
It definitely does.
And with the regulatory baselines for M&A actively shifting right now in Korea, isn't that a really dangerous game for these boards?
It is a highly precarious time to restructure, honestly. The new mandatory tender offer legislation raises acquisition costs for listed companies immediately upon enactment.
And just to clarify the mechanics of how that works for you, the listener, this is because acquiring companies will now be forced to offer to buy shares from minority shareholders at the exact same premium price they paid for the controlling stake, correct?
Spot on. Because of that rule, the upfront cash required for a takeover instantly skyrockets.
Ouch.
Yeah, and compounding that pressure, the Financial Services Commission publishes low-PBR company lists this October.
Right, so if your company has a low price-to-book ratio, you are suddenly highly visible to activist investors precisely when your restructuring costs are peaking.
Exactly.
Which makes your core technology strategy even more critical, especially when, geopolitics enter the chat.
Precisely. It's like trying to build a cutting-edge factory, but suddenly your lead architects aren't legally allowed to look at the blueprints because of their passport. The tech stack is no longer just about capability, it's about geopolitical risk management.
So, synthesizing all of these structural shifts for our listeners managing operations in Korea, what is the exact bottom line here?
The U.S. blocking foreign nationals from Anthropic's most advanced AI models forces your enterprise CIOs to treat vendor selection as a geopolitical compliance mandate immediately. Samsung phasing out low-margin manufacturing and LG Innotek executing multi-billion-dollar CAPEX prove AI supply chains are the new survival requirement for #COSPI boards. The incoming mandatory tender offer legislation requires an immediate board-level review of your pending Korean cross-border acquisitions or subsidiary restructuring strategies before the end of Q3.
That is a lot for any executive committee to digest. But here is one final thought to mull over before your next board meeting. If AI stack compliance and physical infrastructure are your new defensible moats, what happens to your valuation when activist investors realize your legacy software contracts are actually a massive liability? That's today's AI PRISM, CEOs. This episode was produced with AI assistance based on Seoul Economic Daily Reporting and reviewed by a human editor. AI PRISM is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.